Very much. Okay, as we look at the S&P, still down about 3, showing indecisiveness. Just want to give you a little history here. The closest we have come in the last 10 years to the craziness and the volatility that we have seen this week here at the New York Stock Exchange was back, for me at least, 2008, right? When the entire banking system was really in trouble, hanging by a thread during the financial crisis. Stocks were spasming, and the man who led the cornerstone of American capitalism right here at the New York Stock Exchange kept things orderly and organized. He joins us now in a Fox Business exclusive. Duncan Niederauer, the former New York Stock Exchange CEO, by phone. Hey, Duncan, you miss all the action here?
I have to say, Liz, I've been happy to be doing other things this week instead of having to worry about that every day. But thank you for the walk down memory lane from '08. That was quite a time as well.
That was quite a time. And you and I were right down here. And I remember you showed real leadership. You charged around the floor of the New York Stock Exchange, talking people, keeping them calm. But I need to ask you, from your trained eye and your perspective, what do you think is really at the heart of all the volatility this week? Is it really just China falling, China intervening, or is there more to it?
Yeah, I think it's always a confluence of things, Liz, and I think one of your previous commentators talked about the VIX, which has kind of lulled us to sleep the last few years. And when you have a VIX trading in the mid-teens for as long as we have, you've got rates at zero, you've got the market slowly grinding up over the last few years. I think people just get complacent. So that's point number one. Point number two, that maybe the China devaluation took people by surprise, but I'm not sure why our market follows the Shanghai market. For any followers of the market, they would know that the market in Shanghai, for as big an economy as China is, the market really only reopened less than a quarter century ago. So it is a very undeveloped and very illiquid capital market. So, you know, we didn't follow it on the upside when China was up 40% earlier in the year. I'm not sure why we're overreacting to it on the downside, if you ask me personally.
I am so glad you just said that. I think that that's the kind of perspective somebody like you with decades of experience is really giving to our viewers right now. Guys, everybody should be watching and listening to Duncan. And I need to also bring back to Monday the 1,089-point drop, which now has at least some regulators like the SEC, FINRA, NASDAQ, and here at the New York Stock Exchange, probing the chaotic trading, especially on exchange-traded funds. You know, Duncan, you oversaw a lot of the electronic shift here. We still have traders behind me, but not nearly as many. Do we still need that open outcry system to make sure that things remain controlled when we do see large electronic program trades that kicked into the markets on Monday?
Yeah, as you know, Liz, I always thought that a combination of high tech and high touch was the right answer. I realize that the markets, inevitably want to go faster, but I think when you combine a late summer increase in volatility, so you've got fewer people in front of their screens, on the buy side and the sell side and on the floor, and then you add that to the choppiness that today's market structure brings us. I think Teddy was right. You're going to see a lot more action that we saw. Like we saw this week, and that whether that means volatility is here to stay, I don't want to project that, but I would say that people should be looking to find products that help them manage the volatility, because we've been lulled into a false sense of security. A VIX at 14, 15 is not normal, and I think 25 is what we should be looking at going forward, and people should think accordingly.
Duncan, we miss you, I have to say. We do miss your leadership down here at the New York Stock Exchange. You were always good to us here at Fox Business, and I hope you're relaxed and calm and happy not to deal with this.
I'm very busy, but I'm busy doing other things, and I'm glad it's someone else's turn. So I appreciate your comments, Liz. It's always nice to talk to you, and just encourage everybody. It's a lot of volatility, but as I said earlier, we shouldn't be chasing places like China. We should be focusing on what's going on here at home, which is actually a pretty good story in the U.S. right now, I think.
Amen. And there's the headline. We shouldn't be chasing China. Put that aside. Duncan, we'll talk to you soon. Please come join us when you're back in New York. Anytime.
Thanks a lot.
Duncan Niederauer,
Thank you.
Of course, the former CEO of the New York Stock Exchange.